A 1-to-1 exchange rate between the euro and the dollar has been broken, and the euro has plunged to its lowest level in 20 years. In the marketplace, it acts as a psychological barrier. However, psychology plays a significant role, and the euro's decline highlights the gloom among the 19 European nations that use it as they battle an energy crisis brought on by Russia's conflict in Ukraine. Here are the causes of the euro's decline and potential effects. What means parity between euro and dollar? It indicates that the value of the currencies of Europe and America is equal. The value of the euro has decreased this week to just around $1, albeit it is continuously fluctuating. High energy costs and record inflation are the main causes. In order to keep industry running smoothly and produce energy, Europe is much more dependent on Russian oil and natural gas than the US. Oil prices have increased due to worries that the conflict in Ukraine may cause a loss of Russian oil on international markets. Additionally, Russia has reduced its natural gas shipments to the European Union, a move that EU officials have characterized as payback for the sanctions and armament deliveries to Ukraine. The sense of impending doom increased when Russia said it will shut down the Nord Stream 1 pipeline for 3 days next week for regular maintenance at a compressor station and decreased the flows through it to 20% of capacity to Germany. Due to diminishing supplies, worries about potential supply cuts, and rising demand, natural gas prices on Europe's TTF benchmark have surged to record highs. Robin Brooks, chief economist at the Institute of International Finance Banking Trade Group, tweeted on Monday, "If you think euro at parity is inexpensive, think again." German manufacturing lost its competitive edge when it lost access to inexpensive Russian energy. In a subsequent tweet, he warned of an impending global recession. When did the euro last equate with the dollars? Shortly after its debut on January 1, 1999, the euro reached an all-time high of $1.18. However, it subsequently started a sustained decline, breaking through the $1 threshold in February 2000 and reaching a record low of 82.30 cents in October 2000. In 2002, it surpassed parity as the dollar suffered from significant trade deficits and Wall Street accounting scandals. What seems to be a euro story now, as it was then, is also in many ways a dollar tale. This is due to the US dollar's continued dominance as the default currency for global trade and central bank reserves. Along with the euro, the dollar has been rising to 20-year highs versus all of its main trading partners' currencies. Why is euro slinging? Many analysts blame the euro's decline on predictions that the US Federal Reserve will raise interest rates quickly to combat inflation, which is at nearly 40-year highs. Rates on interest-bearing investments often increase in tandem with increases in interest rates set by the federal. Higher interest rates will entice investor capital from euro-denominated investments into ventures denominated in dollars if the Fed hikes rates more than the European Central Bank. To purchase those holdings, those investors will have to sell their euros and buy their dollars. As a result, the euro declines and the dollar rises. The American economy appears to be doing better, so the Fed may continue to tighten while also widening the rate differential. Who excels? In Europe, American visitors will pay less for lodging, meals, and attraction tickets. The euro's decline could increase the pricing competition of European export items in the US. Since the US and the EU are significant trading partners, the change in the exchange rate will be noted. A stronger dollar in the US results in cheaper pricing for imported items, including toys, medical equipment, cars, and computers, which may assist to restrain inflation. Who is lost?